Small business insurance. Best practices for reducing coverage costs all year long. If you own a small business, you should develop a risk management plan to hedge your operations against all kinds of uncertainty. Business insurance helps you cover some key risks, and in this video, we'll help you make sure you have the right amount of protection and are getting the most bang for your buck. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you're doing as great as I am, go grab a cup of coffee or tea or vodka. Today I want to talk to you about small business insurance. What can you do to reduce coverage costs all year long? Number one, develop a strong risk management in your daily operations. This is very important. What do I mean by that? Basically, you want to look at your operations from A to Z, from sales to purchasing to insurance to delivery to logistics, and identify where the risks are. Now, if you're not familiar with the term risk management, you might want to reach out to an expert to help you identify the bottlenecks that could pose significant risks to your business, right? Because identifying potential business risk and having the right insurance coverage in place can be financially significant if the unexpected happens. It's all about unexpected things happening. Let's say, for instance, that your company experiences a data breach, right? You have a hacker that gets into your business, and you have your data and customers' data compromised. That means you'll be responsible for costs related to your business recovery, and I'm talking credit monitoring services or any legal fees you may incur, as well as potential fines from your state if your business was required to have this coverage, right? So depending upon the situation, this could mean thousands, if not tens of thousands of dollars out of your pocket. Whereas if you had data compromise coverage, your insurers will take care of everything. They will have help pay for some of these expenses, right? So you want to think about measures that your company can take to help reduce business risks. I'm talking about operational risks, legal risks. We have dedicated an entire show for the operational risks, and you might want to double check that. But here, just think about, for instance, let's say you're planning for a disaster at your business. It's always a great idea to think ahead and have a plan in place to help your business recover after a disaster. Let's say, for instance, a destructive storm, right? So by taking things in your own hand in advance, you're able to prevent a larger amount of expenses getting out of your pocket, and you can also reopen sooner after the disaster strikes. There is another thing that you want to think about in terms of risk management, and we also did a show about that. It's called BSP. That's the business succession planning. Now, as a business owner, you will likely want to leave your company in good hands, right? When you decide to retire, or the passion or energy is no longer there, you want to cede the reins of the business to another person. It could be your hair, it could be your children, or it could be somebody else. You can even sell the business. So having a succession plan in place may help the transition go more smoothly. So it's very important here to review and understand your small business insurance policy so that as an owner, you're able to identify a risk and mitigate those risks, or have insurance mitigate those risks for you. Okay. Number two, bundle your various coverages. Now, number one, I told you to develop a stronger risk management in your daily operations. Number two, bundle your various coverages. Now, bundling is very simple. It means that you are actually aggregating all your insurance policies with one provider, right? So basically, if you have multiple policies with different insurance companies, it's great to bundle everything with one or two. My preference will be one. And what you want to do is you want to find an insurance company that has great rating, that has grade A, that's grade A or AAA in terms of credit worthiness, right? I'm not naming names here, but it's very easy to type on the internet just to Google the top insurance companies in your area and just choose one. And there are several benefits to this. Number one, costs go down, right? The premiums go down. You, in terms of paperwork, you only have to deal with one insurance agent. You are able to control your insurance expenses every month. You're able to plan. You're able to, basically, you have a business partner who can advise you in terms of risk management, who can advise you in terms of cash flow management. And it's very important. Again, remember that insurance, the bottom line of insurance is to mitigate risk, but also protect your cash flows, right? And also you are saving time. You don't have to call or contact several business agents, several insurance agents. You're calling only one. But make sure that you choose the right one. You choose the right insurance policy. You want to choose an insurance policy, the insurance provider rather, who is strong, which and a company that is rated AAA or AA that has great rating. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are still having a conversation around small business insurance management, and I'm giving you best practices for reducing coverage cost all year long. Before I get into the nitty-gritty and continue the conversation, please subscribe to our channel if you love the clarity and quality of the show so far, and turn on the notification bell. In addition, comment below. Let us know your experience when it comes to business insurance, small business insurance, and like this content and share. Somewhere right now there's someone who might need this kind of info to manage their business better, to improve customer service, to increase sales and reduce cost. All right, now number 3, reevaluate your deductibles. Now, what is a deductible? It's basically the amount of money you pay out of pocket toward a covered claim, right? So if you increase the deductible on your business insurance policy, you are in effect reducing the cost of your premium. So for instance, deductible could be in a percentage, or it could be in a finite amount. So the insurance company can say, listen, your deductible is $200. So whatever happens, you're paying $200 before, and we just cover the rest. Or it could be 20% of the loss amount. So if you increase the deductible, you are in essence telling the insurance company that, hey, listen, I'm here to mitigate the risk with you, and they will reduce the premium for you, right? So you can then consider putting the money you saved back into your business each month. All right. So, before choosing a higher deductible, though, consider how much money you would have available to pay out of pocket to repair your business or replace its content after a covered claim, right? For instance, fire or theft, right? Or data breach, an online data breach. So those are internal conversations you need to have with your staff. Another thing you want to have here, and this is very critical, folks, get data compromise coverage. We live in a world right now where the internet plays a predominant role in daily affairs of people and businesses, where your customers' data, your business data, your personal data, your staff data, everything is on the cloud or on company servers, and they are exposed to any breach possible, any hacking activity, any identity theft activity here. So data compromise coverage comes to help. It is an optional coverage that you can add to a business insurance policy. Now, data compromise coverage, sometimes some insurance companies call it data breach liability insurance, DBLI. What it does is it helps reimburse your business for some expenses after a data breach. What are those expenses? Informational materials for affected customers or employees, credit monitoring services for affected customers or employees. You can also have access to an identity theft helpline if customer and employee information is stolen, and your business legal fees after a data breach. Now, it's very important. These things here I'm talking about, those could you can easily pay tens, if not hundreds of thousands of dollars, depending upon your business and if you are operating in multiple states, right? Because we're talking about customers and also employees. And if those two groups, or those either jointly or separately, wants to pursue a class action lawsuit, you are toast. So data compromise coverage helps you avoid that. Now, remember though that data compromise coverage does not typically pay to restore your company's computers or systems affected by a data breach, right? It pays for the things I just mentioned earlier. Now, the question is, do you really need that? Do you really need DBLI, data breach liability insurance? The thing here is that a lot of states, I think as of the date of this show, 32 out of 50 states now require businesses to notify individuals if a data breach may have compromised their personal information, according to the Federal Trade Commission. So compromised information could include social security numbers, driver's license or passport numbers, financial information such as account numbers, or digital signatures or passwords. Right? Now, federal laws also require that most companies should notify individuals if their personal health information has been compromised. Right? So if your business owner's policy include data compromise coverage, this can help you pay for expenses related to notifying affected individuals after a data breach. Now, getting DBLI is great because you are basically covering your butt should something happen, right? Now, how can you prevent a data breach in the first place? You have to understand that at many businesses, 90% of employees, according to the Small Business Administration, they don't have needs that require access to secure data. So a great way to prevent a data breach is to restrict employee access to sensitive customer or employee data. You can also safeguard secure data with a password. Now, you can also implement a policy that requires employees to use strong computer passwords or two-way identification processes so that hacking becomes difficult for data thieves, right? Again, here we're talking about if you're somewhere in Oklahoma, somebody somewhere in Somalia or Brazil can actually hack into your computer, your business computer, and inflict harm, right? So you want to protect that. Now, if a data breach occurs at your business, despite your best efforts, data compromise coverage can help you respond to the crisis. All right? So I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are very happy to still have you with us today, and we are having a conversation around small business insurance, and I'm telling you about the best practices for reducing coverage costs all year long. One best practice is to review your coverages annually with your insurance agent, right? Because your insurance agents can help you review your current coverages and make any adjustments based on your company's changing needs. Your company is not static. Things change, right? And you want to make sure at any point in time, whether it is on a quarterly basis or biannual basis, you're able to make sure that your insurance protection, your risk management strategy fits your business operations, right? Businesses change all the time. So it's a great idea to review your policy with your insurance agent. Now, if you are able to do that, you are safeguarding your business future, right? And you should always have a conversation with your insurance agent when there are several things happening. Let's say you reduce or increase the number of employees you have. You move your business to a new location. You introduce operational changes, right? Let's say you expand your product offer or you buy new equipment. Now, when you review your insurance policy, it's important that you understand the various coverages that may be available, right? For example, you have general liability insurance, right? That's helps protect your company in the event of a lawsuit. If you or an employee accidentally hurts someone or damages their belongings while doing your work. You have business property coverage that helps protect your business's building and its content, and may help replace business property such as office furniture or computers after a covered loss. You have business interruption insurance. This helps replace lost income and pay for extra expenses if your business is affected by a covered peril. Business auto insurance. If you have company vehicles, this insurance policy helps repair or replace them in the event of an accident. Equipment breakdown coverage. This coverage helps pay to repair or replace damaged or broken down equipment after a covered event. Employment practices liability insurance helps pay for legal costs if your business is sued by an employee or contractor. Errors and omissions insurance, and this in the industry sometimes you might hear it's also called miscellaneous professional liability insurance. This helps protect your business if a client holds your business responsible for losses based on mistakes or false advice supplied by the business. And one of the last coverage you might want to think about is what I just said earlier, data compromise coverage, right? This obviously helps reimburse your business for certain expenses such as credit monitoring services or legal fees after a data breach. Now, the reason why I'm giving you all that long list is not really a long list, but I'm just trying to tell you that there are a lot of ways to protect your business, which is why, going back to my earlier point, you want to bundle all coverages so you have one conversation with a single insurance agent. Imagine if you had 10 insurance policies with 10 different companies. This conversation I just talked about, you're going to have it with each of them. Whereas if you had only one, you having a single conversation either on a quarterly basis or biannual basis or annual basis, and it's 30 minutes of your time well invested, right? Okay, let's quickly get a recap here. What are the best practices to reduce coverage cost all year long when it comes to small business insurance? Number one, develop a strong risk management in your daily operations. Number two, bundle your various coverages. 3, reevaluate your deductibles. 4, get data compromise coverage. 5, review your coverages annually with your insurance agent. I'll talk to you next time. I really appreciate your help, appreciate your attention, and good luck. And until then, stay marvelous.